My name is Curtis Johnson, and I'm excited to have you on this short training. We're going to cover a little bit about what the process looks like to refer clients. If you feel like your clients would be well suited for some strategic tax planning, some tax elimination strategies, we're going to be talking to Michael Moffa, who is the CEO and founder of Prosperity Tax Advisors. We've sent over many clients that have had great success in working with Michael and his team of tax professionals, attorneys, CPAs, forensic accountants, etc., and the amazing technology that they have that acts as a 1-2 punch to really be able to find some amazing strategies and bring them to clients. So what we're going to do just really quickly, so you don't waste any time if you're wondering, do I have clients that are a good fit for this? Really, the kind of clients that PTA works with, Prosperity Tax Advisors, they're sitting with clients so in the year 2024, that client is projecting that they will pay over $50,000 in taxes, and also that they are a business owner or solopreneur, 1099 income of some kind. Unfortunately, out there are not as many strategies as you would think that help W-2 employees save money on their taxes. So that kind of explains who this would be a good fit for as a prospective client. Now, Mike, walk through really what would be a good example of what you cover with a client on the educational side and really what you have to offer.
A little bit of a background is typically most people have tax preparers, accounting team, CPA. So just like Curtis mentioned, what qualifies for our services really is just two items. One, a tax liability of $50,000 or higher. And the second thing is you've got to and must have your existing accounting team and CPA. That's it. Very two simple things. Now, we don't replace that accounting team. We come in above the accounting team, coordinate with the existing accounting team to implement tax planning strategies and reduce your tax liability, less of a check cut to the IRS, right? A little bit of as far as the background goes with me, how did I kind of get in the industry here? I got about 22 years of private wealth experience. I also own a private wealth management firm. Coordinating the two, clients of mine were always business owners, typically 1099 self-employed. So what I've noticed is that a lot of business owners were not getting tax planning advice. They were getting accounting advice. Maybe you spent a little bit of money on a travel trip somewhere and your accountant is able to say, you know what, let's move that column into the business travel expense column, right? So that we can get a little bit of a deduction, right? That's accounting advice. What I'm talking about is tax planning advice, right? Planning proactively and implementing strategies in the current year, right? Now, the first and foremost, what makes us unique is our AI advanced software technology. It's amazing. Nobody has it yet, as far as I understand, across the 50 states. We have clients across the 50 states. But right now, we have advanced software technology that helps us scour the 70,000 pages of the IRS conduct, pulls in almost 1,500 strategies from a federal, state, and local level. Now, the 1,500 strategies, not all of them are going to be applicable to every business owner, right? We got to tailor it. We got to customize it to every business owner in particular. And that forms our executive committee. Myself, right? Again, coming in with 22 years of private wealth experience. Nick Turner here is our tax lead manager. He comes in with our 15 plus years of working with KPMG, which if any of you are familiar with the accounting firms, the top four, Mike Furdock is our tax compliant attorney. Now, again, everyone here, listen very carefully. Every strategy, every loophole that we do is legally and ethically bound by the IRS code itself, right? So that's where we have our attorney in here. Stephanie Vorig is our director of client accounting. She's also our forensic accountant and financial accounting, risk mitigation standpoint, and financial accounting standpoint. Jennifer is our bookkeeper, and the two ladies over here are our account executives. With a raise of hands, who here has gotten a thank you card, a hug from the IRS when they sent in that tax payment in tax filing time, right? Nobody. The IRS knows that 9 out of 10 business owners and self-employed overpay taxes. They know it. So what is the dilemma? People tend to feel like their accountants and CPAs are saving them money in taxes. Well, the truth is, with a raise of hands, again, who here is consulted with their accounting team and or CPA throughout the year, multiple meetings, and thoroughly planned for tax strategies that have to take implementation or action on throughout the year in order to receive a tax savings? And I ask that question all the time, and very seldom will you see hands up. Great. but for the most part, nobody, right? When do we have conversations with that accounting team? Right about now, right? February, March, taxes are due April, but then everybody files extensions and we kind of come back around in September and October. So tax planning is very, very vital, very, very important. And the problem is DPAs and accounting teams would love to do tax planning. They just truly would. They just don't have the time doing tax preparation, tax work. And nor do they have the proper securities license in order to implement some of these advanced complex strategies that have very special tax provisions and save you money on taxes up front while creating generous wealth down the line. So I do, right? And that's hence I have the licenses behind me and the tax planning team and the executive committee in place. Every single year, folks, you need to do tax planning every year because the loopholes have an expiration date on it. There are new loopholes that get passed through legislation as it goes up to different chambers in Congress. The reason, one thing that I tell you right now, point this out, is what makes us very useful is that our AI technology is going to combat the AI technology from the IRS. And they now already implemented AI technology on their side. What does that mean for you and every business owner and 1099 individual? They got multiple departments filled across the United States. AI technology now, and you could Google this, right? That's just kind of where I just took some of these clips from. They're able to scan your return in a matter of minutes. They're able to go back 3 years of your return in a matter of minutes. So we need to utilize strategic, legal, ethical strategies that need to be implemented to help offset some of the aggressive write-downs and deductions that a majority of business owners, including myself many, many, many years ago, have been involved in, right? So again, this is a great visual of what people think and assume their CPA is saving them in taxes. Just a very, very tip of the iceberg, right? But what you could save when you proactively plan for tax strategies throughout the year. So I'm going to kind of get into what we do. What is it that we do that's kind of different or can work in coordination with your accounting team and CPA? Well, we start off with the first step is a tax analysis, right? So just like anything else, obviously, we don't know what people say. We want to see documentation. So we're going to receive and request documentation after the first meeting. And what we're going to provide you is what's called our tax analysis. And what's included in that is a tax plan with recommendations in the current year, right? So we're in 24. The question I get asked is, when's the right time to do this? Well, earlier the better. We have done this, and Kim can attest to this, as well as Curtis. And we have a lot of clients come in towards the end of the year, and it gets a little crammed in, trying to make sure we get these strategies that are due before December 31st in order to be categorized in the tax year, right? Now, this slide here is going to make people a little disappointed, a little sad, a little upset, a little nauseous, right? Now, what this slide shows, we're going to show you visuals of what you overpaid the IRS in the previous years. And that's the page that people kind of get a little nauseous about, right? What they may get a little bit more nauseous about is what they're about to pay the IRS in 2024. So that's our job, right? So partnering with us, if for example, you're going to overpay the IRS by $83,000, we're going to show you a tax plan that can save you between $83,000 and less in tax savings, depending on which of the implementation strategies we were able to do, right? The other thing is pretty cool is that our unique advanced software technology, again, not replacing your current accounting team. We just do a second set of eyes or a second opinion over what strategies from the accounting side that they're implementing, not implementing, or don't even know that's available. Maybe your account forgot one of the 5 depreciation strategies, right? Well, we're going to notify that. And we're going to let you know what our challenge and concern is with your situation. If we have kids under the age of 18, why are we not hiring them in our businesses, right? And a lot of times you'll get from certain accounts, well, you got to pay them a certain amount. So otherwise the IRS will question it. The IRS will flag it. They don't know how to document and substantiate any of the strategies, which is why they don't do these things, right? Folks, there are different entities out there that allow you some asset protection from the front end of the spectrum, but also some significant tax saving strategies if implemented on the back side of it. But what we've come to find is that a lot of people are misdiagnosing their entities. In other words, they're making an X amount of money, but their entity is an LLC or an S Corp or a C Corp. Or a fractional C Corp, which most people never even heard of. So there are ways to restructure your entities to gather and claim the most ethical and efficient tax strategy and deductions out there. Well, if you got multiple departments in your business, well, how do we strategize out in that different entities to characterize and open up the door to different tax strategies? We're also going to look at every single retirement and tax analysis available strategy out there. There's 80 of them. 80 div. Now, this is where the accountants are not familiar with. This is my neck of the woods. This is where I, the last 22 years, specialize in. There are many, many strategies that have special IRS provisions that not only will help generate generational wealth down the line for you, if done appropriately and documented and substantiated correctly, at the same time, get a very nice and hefty tax deduction up front. Just like anything else, there are strategies that are built into the IRS conduct that don't require any out-of-pocket cash flow, and then some do, right? Just keep in mind, because I own a private wealth firm, I'm not here to poach anybody's clients. I just want to make that a stand-up for. What I can actually do is, one, make you look like a rock star in front of your clients, and two, open up additional assets that you weren't able to get or manage if you're on a security side basis, and like I did, for Kim here. So, just keep that in mind, that this is tax planning. We're coming in with tax planning.
Yeah.
So, but keep that in mind. I'm not here to poach anybody's clients. I have no intention of doing it. I would actually refer you if we had to open up a business account or an investment account or sell an insurance policy, part of a charitable remainder trust strategy or something like that, then I'll refer it to you guys and open and put you on a basis to sell insurance and make an additional commission on that too. So just keep that in mind.
Perfect.
And the other part of the tax analysis we'll look at is the insurance and asset protection side. Now, this is my favorite section as well. But we will look at all the different statutes in each of the different states. We have clients, again, across the 50 different states. And we're going to find out which of these, what is your situation? And we're going to make sure we put you in the best tax position, right? One thing I always want to point out, this is very, very important, very, very transparent, is every single loophole, every single strategy that we recommend is legally and ethically approved by the IRC code itself. You will always see a IRC code attached to every single strategy that we have. So, but anyway, we just want to show you that everything that we show you and represent to you, it's not in the gray areas. Everything is legal. Everything is compliant. Everything is ethical. Is just if it fits your business. Some people try strategies that don't fit their business, and it's very hard for them to document it and substantiate it. That's where they get in trouble. Because if it's the right strategy and it's the right approach and it's got the right documentation and the right substantiation behind it, it works. It's all available for every single business owner in 1099. So just keep that in mind, right? So again, why don't accounting teams and CPAs really, again, do tax planning? Well, there are certain deadlines that need to be met throughout the year. They don't have the time to do it. There are deadlines in the beginning part of the year, the middle, and the last part of the year. So if they're doing tax preparation, they're bogged down for the first 6 months of the year. Well, you missed out on a bunch of strategies that need to be implemented in the first part of the year. Then there's the other half of the year that needs to be implemented as well. There are hard deadlines that need to be implemented by. If not, we'll try it next year. And by the way, the communication with us is obviously quarterly by default, but if you have questions, obviously we're here to respond and answer them. We're business owners here on the line, right? And so I'm assuming that at some point, some of us, or the way that we're incorporated in our entity, we got to pay ourselves a salary, right? And again, with a raise of hands, who here pays themselves a high salary because their accountant told them to, without any justification behind that? Let me give you an example of a doctor that we helped out. They paid themselves $300,000 in a salary, $300,000. We ran through this report, which we include complimentary in our tax analysis. The salary came back at $92,000 with 11 pages of documentation and substantiation, right? We saved them almost $14,000 in tax savings by reducing their salary from $300,000 to $92,000, took the difference, and of course, that's going to be taxed at a higher rate than payroll tax, right? But we now open the door to additional tax strategies that we could attack that money versus it all being in a W-2 salary, which you can't attack. Okay, good. So the first thing is, it's a two-step process with every single client. The first step is tax analysis, what I kind of went through. So the first part of the tax analysis, because of the partnership, right, we are charging $1,500. That is negligible in the eyes of a business owner to get that much information up front. $1,500 gets you everything I went through: analysis, challenges and concerns of your situation that we identified. Obviously the documentation we need ahead of time is the data we're going off of, P&L, and we're not in the job of making money off of $1,500, right? I mean, it's a stepstone into the third meeting, right? So of course there's 3 meetings for that tax analysis. The first one is the introduction, what we do, then we collect payment. Then we book 2 meetings, typically 7 days apart after the second one. The second meeting is the questionnaire. This is where our account executives request documentation in our encrypted portal, right? So you upload your tax returns, your P&Ls, your mortgage settlement statements if you're selling properties or investment properties, everything that we require, retirement accounts and such. Then we analyze that information and we come up with questions for a second meeting, right? And then we have that meeting. Typically 20 to 30 minutes is the length of that one. Then we go back and do what we are supposed to do and what we really shine at, right? It's coming up with your tax analysis. And so 10 days between second and third meeting, we deliver this tax analysis delivery to you. Now, I get questioned all the time, like, well, I give you the recommendations. I give you the solutions. 2 choices you can make here, right? One, you can go and have your accounting team do it. Not every CPA is going to do these tax strategies because they don't know how to document and substantiate it correctly, legally, and ethically. So they're not going to do it because they don't know how to do it. Or you could hire us to do the implementation, to do the documentation, to do the substantiation, and we audit protect our strategies. They are legal and ethical strategies available to every single business owner that's out there. You just have to be the right fit. And so that's where our customization comes in, right? From our executive committee. But anyway, the implementation costs for us to do all those things, implement, document, substantiate, audit, protect, we charge 40% of tax savings, right? Under $500,000 in tax liability. Well, some people might say, whoa, 40% on this is, let's use $100,000 example, right? So we would charge 40 grand, right? And maybe with a discount rate if you do the lump sum up front. But someone's like, whoa, that's a lot of money. I'm sorry, but you just spent $100,000 to the IRS last year and you didn't get nothing back. Here, you're going to get roughly $60,000 back in your pocket to, again, free up cash flow, reinvest in your business, hire a new employee, reinvest in your wealth to generate more wealth down the line, right? You free up more cash flow and cash reserves. We almost 80% or higher are going to close on the implementation side. So, and I'll end with that.
Perfect. Yeah, Kim, go ahead.
Yeah, I wanted to clarify this one point because I found just from talking to prospective clients on this fee aspect. But one thing that I have found with prospects is when I say 40%, they automatically balk at that and they freak out, like Mike just said. But what you have to understand is it's whatever PTA, prosperity tax, is substantiating and handling themselves. So if a client already has all their travel expenses, their business deductions, it's not 40% of that, right? It's not 40% of whatever. It's what after your CPA does their bit and they go in and find all your deductions. You contributed to a 401k or an IRA. After all that stuff is done, it's just what PTA is recommending and substantiating. So it's a check you would have written to the IRS anyway. And so once I've clarified that point, then the prospect goes, oh, duh, that makes sense.
Yeah, and Kim, you said it correctly. You don't have to even cover it because it's going to get covered in the appointment by their team who obviously knows how to handle all that very well.
Yeah.
Yeah.
Go ahead, Mike. Sorry, I cut you off.
We just want to notify everybody here just what the fees are. And again, it's 40% of something that you never had.
One of the big things everyone is going to ask is on the compensation side. Compensation is it's on more of a sliding scale. So you might start out at, call it in the 2.5% range of savings, but then as volume grows or as you go through the process, become much more familiar, that's where you can get up into the 5% range. I think the top contract's in the 5.15% range. So there's a lot there to be made. So in Kim's example, that 6-figure compensation commission is due to saving that client millions. We are talking also about the ability to free up cash flow as a result. Things like that could lead well to other business. Like Kim mentioned, she was in the insurance business, but other people might be in the real estate industry and they, have clients who might have gone after a bigger house if they had the right taxes, because obviously in that case they don't want it to all go away because they need to qualify for a house, but they still don't want to pay in excess of taxes. So if you're able to help them hone into that sweet spot, you're able to add greater value. And of course, in this case, I'm sure many of the people who are hearing this have a tax liability projected for themselves in the year that's going to exceed that 50K mark. And this is a smart strategy for you to apply, of course, as well. Thanks, Mike. Appreciate it. And I think this gives any prospective rep a very good idea of what this process looks like. And again, long and the short of it is, if you have clients who are affluent or you think would like to pay less in taxes, this is a great addition to what your core focus might be. Maybe you're P&C, maybe you're in life insurance, or you're a financial advisor. Yeah, and even for CPAs out there, think of how much better it would be if you're bringing this team in place to add further value to your existing clients. They're going to see it as a big plus versus maybe someone coming in and introing it to your clients around you. So very valuable on that side. Mike, thank you so much for taking the time. Kim, also thank you for chiming in on everything. And we will catch everyone in another training where we cover a lot more on how this whole process works. So thank you so much for taking the time to watch this, and we'll see you in the next one.